Hey, this is Justin with DayTradeTheMarkets.com on Thursday, April 25th, and I wanted to look at the crude oil market today. Had just a beautiful breakout higher. Actually had a really nice breakout trade today. I had a video recorded of it. It was just one of the best trades I've had in a long time. Fortunately, I messed up the rendering. I don't have it, so I'm a little frustrated. I've been trying to work on that, but I wanted to, I guess that doesn't really matter. I wanted to kind of take you through the thought process of the trade and just kind of show you, what I was thinking or kind of going through and what the evidence was telling us. Now, we like to really focus on putting the market in context, both short-term and long-term. And then once we have a pretty good handle on whether bulls are in charge or bears are in charge, or if it's more of a two-sided consolidated market, then we adjust our trade plan to that. And so, with that said, longer term, I want to show you a little bit of context longer term. Here's just a simple daily chart using regular trading hours of crude oil. And, what we had here was a pretty nice sell-off basically all of this month. However, and we had two gaps here from earlier, and then there was another one. Now in yesterday's trade, and I actually did a video on crude oil yesterday as well, we took out this gap, and I'll refer to that as well. So that's showing us a little bit longer term. This market is shifting. It's becoming bearish. Now we closed here yesterday and we opened in here today. You could see by the end of the day we took out this huge gap above the market as well, but that was the context right there around 92, I think 19 or 92.20 was the low of that gap. So I just want to put the little context in the market there that over the past month it's been going down, but we've seen bulls really come in. And to kind of illustrate that, I go back to my 2-minute chart, which is just kind of the standard chart that I like to look at on crude oil. I did a video, and you can check this out, from the videos page yesterday, but you could see we had a very small gap up, and then we had the level 3 buying bar, more level 3 buying bar. Here was the gap, and we just shot right through that here with more level 3 extreme aggression bars. You can see the bulls were just clearly in control the whole day, and I broke down yesterday even more so. So it was showing us that heading into the day, the bulls were really asserting themselves and taking over. So, I'll just kind of go through it like this. And so today, all things equal, rather be on the long side. But you can see the very first bar of the day was what we call a level 3 selling aggression bar, and had immediate follow through. So what is that telling us? That's telling us, number one, that short term bears are in control of this market. You're not going to want to fight that and go long. So if you're looking to get long, you're going to want to wait for some bullish evidence. Or if you're more aggressive and kind of want to buck the trend a little bit, it's giving you evidence that sellers are in control. Here's a level 2 or strong selling aggression bar. Here's another selling aggression bar that matches in with the last level 3 bar from yesterday. Okay, but this is the first selling structure that didn't get any follow through. You can see the low was taken out by a few ticks. It decelerated, and we start to see some level 1. That's not amazing, but it's starting to show you that some buying's coming in. Okay, so it's our first clue. It doesn't mean bulls have taken over, but when this high gets taken out and we have a full bar above this bar, it's telling us that this market's at least two-sided. So we were bearish controlled here. Now we're at least two-sided. Okay, we would need to see some bullish evidence to come in to show us that bulls are more taking over. And so if we roll this forward just a little bit, you can see that our first bullish structure was this level 2 or strong buying aggression bar. And so we ask ourselves, can the low of that hold, which it did beautifully, and then can the high of that get taken out, which it did. So that's our first clue that bulls are really starting to assert themselves and take over. So in other words, we had a situation where bears really stepped in with some aggression, couldn't get it any lower than yesterday's, basically the close of yesterday. Okay, now bulls are starting to come back in. Okay, so roll this forward a little bit, and you can see here that the high of the day at this point, right around 15, got taken out, and it got taken out on a level 3 buying aggression bar. So in a situation where a level 3 buying aggression bar happens, especially in crude oil, I like to be a kind of more of a breakout trader in crude. When a level 3 or extreme buying aggression bar is occurring on the high of the day, with the context bigger picture of the market being bullish, okay, and the fact that bears made a really good push and couldn't do anything, and now the high is getting taken out, and it's doing so on extreme buying aggression. Okay, that's kind of a textbook breakout type trade in my opinion. Now, this was a tough situation for me because I also knew that if we look here, we knew that gap, a big gap on the daily, was right here. Okay, so at this moment in time, we're starting to we're breaking out right into here. We're breaking out above today's high at that point right here, but it's right into the low of this gap, which, quote, should act as resistance. So that's a tough call. Where normally it would just be a straight breakout, and today it would have worked out fine. It makes you think, okay? It makes you think, do I really want to be buying right into this potential resistance point, bigger picture? So at that point, I decided I wasn't going to. I was either going to wait for a retracement down to the low of this level 3 bar, which we know acts as pretty good support in most cases, and this red would probably flip over to green pretty soon. So I had a lot going for me there if I could wait for the pullback. I was thinking that we're going to go up and at least test this, or I'm going to wait for this next high, or the 92.19, 92.18 price to get broken. Okay, but I didn't want to just get it broken and just put a basic buy stop order there. I wanted to make sure I saw some buying aggression really coming into the market. Okay, and so the first time it broke out, we didn't get any major buying aggression. Okay, and actually another thing I like to do when I'm looking at a potential breakout trade is I keep a shorter term chart on my screen as well. So in this case, at this moment in time, right here, right around 11:30 Eastern, we took out that higher, that level that I was really watching them for. But you can see it's a gray bar on the 2-minute. Okay, I'd also like to look on the shorter term chart to see what we have. At that time, it was also a gray bar. So it's showing you we took our first pop at that level, at that resistance level, or a new high at that resistance level. There wasn't really anything there. So rather than just having a buy stop order there just on price, wanted to see some actual evidence. Okay, so it didn't happen there. Then we got this a few minutes later, right before noon Eastern time. On the 30-second chart, you could see it was really coming in. It was really starting to happen. And so that, if I roll this forward on my 2-minute chart, so I like the 2-minute chart, to give me a little bit more context, as well as the daily chart. You know what? Here's a 15-minute chart as well of crude oil, and you can see again, from here's yesterday, where in the overnight we had that White House news, and that affected the market. Rejection of a selling structure. We got above, tested support. Early in the session yesterday, we took off with some really strong buying aggression. Here was this attempted move by the sellers with no follow through, and then we're breaking out, right? This is the time I'm looking at on my 2-minute, but just the 15 minutes giving you pretty good context that bulls are in charge as well. From yesterday into today, we're breaking out, that sort of thing. So again, any time frame, you could use this for swing trading on the 15, for example. Okay, so if I roll this forward, here we go. It is right here is right around noon when I was showing you, and on the 30-second chart we were seeing that this breakout is actually for real. So just get on board. Okay, so at that point, I don't trade very big size in crude, but I got on board. I scaled out of that about 25 ticks higher in this area, and then my thought process was, let's just ride this thing. We've got a breakout. It's doing so on strong aggression. How can I manage to hold this as long as possible? That's the thought process. So what I like to do is I want to wait for, in this case, when I'm very bullish or very bearish, so in this case very bullish, I want to look at the market and say, I want the market to prove to me that I should be out. In other words, I want to try to stick into this trade as long as possible, and I'm only going to get out if I actually see some strong selling come into the market. I'm not just going to get out at a random price. I'm not just going to get out because I get spooked. I'm only going to get out if the market proves to me that I should get out, if some strong selling comes in. Okay, as opposed to when you're being more nimble, or where you're taking a little more of a back and forth type of a trade, or a two-sided trade, where I like to think of it in terms of, let's make the market prove that I should stay in. So you get the difference. If you're trying to be a little more, if the trade's not as high edge, then you want to make the market prove that you should stay in the market. Look for a reason to get out. If the market's very high edge, like this one is, then you're looking for a reason. Then you want to look for every possible reason to stay in. You want to make the market prove to you that you should get out. So, as this is unfolding, we just keep getting buying structures. Okay, so this was a level 1 selling aggression bar, but I'm looking for stronger selling, and then I would be looking for about a full bar below a selling structure at this point. In other words, I want to use the second half of my position. I want to try to hold as long as possible. Okay, so if we just let that roll forward again, you can see another breakout higher on very strong buying aggression. Okay, another buying aggression bar. Okay, Here's another one. Now at this point, this would be a legitimate, I think, place to place a stop. And when the market hit here, what I did is I moved my stop up to a couple ticks under there because I expected this could be resistance. But I didn't want to just necessarily bail, although I think you could make a pretty good case. We're getting to the end of the day, but I want to lock in some pretty good profit. This is a great trade. This thing just broke out like crazy. You know, we go forward, still no selling evidence. Hang on. We're taking out the high of that gap. Oh, boom, more. Okay. More selling. Now we're getting toward the end of the day. I think I bailed a few minutes before the close, but that, I mean, just a beautiful trade. The point being, I just wanted to really show the logic behind this and show how these tools can kind of help you. So again, to review it, basically, you know, we had, if we go back to even to yesterday, if we go back even to yesterday, you know, we could see that bulls really took over. We took out this potential area of resistance yesterday, this gap from prior back. Okay, we took that out. Now today, sellers, you know, make a push in here. Buyers start to come in. Okay, we take out the high right here on some buying aggression, but we have some expected resistance above here. So when we, you know, we finally broke out on some strong buying aggression, which I showed even on the shorter term chart, and if you were just looking at one time frame, certainly you could have waited for this level 2 bar, which is pretty strong, or even this level 3 bar, or waited for this level 3 bar and then bought the low of that, which is obviously a very low risk trade as well. Okay, so that's the idea. And then once you're in a really nice setup and everything's kind of lining up for you, try to hold that thing as long as possible. Don't just bail because you get spooked. Wait until you actually have selling evidence that comes in, and that did not occur today. So hopefully that thought process makes sense. I'm sorry I didn't get the thing recorded. I thought I had just a beauty to show you, and it just the tech stuff didn't work out, and that's the way it goes, I guess. So hopefully the lesson was still valid, and we'll go from there. So if you have any questions about that, let us know. Hopefully you can see how, you know, the thought process here again is just, it's not some black and white system. I mean, we have trade entry ideas that we recommend, but the whole key to this is to trade a little differently than most people do. Instead of looking for these black and white trade entries, first put the market in context. And like I was showing, you know, bulls were really showing they were taken over from yesterday. We took out the resistance area yesterday. Bulls really, you know, bears made a push early and bulls took over. You can kind of see that happening in real time. So you can use your brain a little bit to get into some pretty good, you know, trade opportunities that are pretty low risk, pretty high edge. So hopefully that makes sense. If you have any questions about that, let us know, and we'll talk soon. Thanks.